let's talk about risk management, right? Let's talk about the fact how I am approaching the market. And I think it's really boring as a trader because most of the time, and I'm not joking, I'm focused about not losing money. Right. There are friends of mine who are asking me, bro, what's your monthly income? What are you making? And like the honest question is, honestly, most months I am have a pretty low hourly rate if you break it down, because I'm so laser focused on trying to not lose much, because I know at some point, talking about risk management, the word risk is in there. I want to take risks because I have like a high confidential thesis, like this week or last 2 weeks with Hyperliquid. I want to step up there and I want to make a shit ton of money in there. And to be able to take risks, I am not allowed to lose the ability to take risks upfront. That's it, essentially. Yeah. How do you avoid having big drawdowns in your portfolio? Well, first of all, I don't know. This can be applied for anyone. This can be applied for full-time traders. This can be applied if you're just doing it as like a side thing. You want to do it as a hobby and maybe profit off that, because there are some asymmetric chances in crypto via airdrops. There are a lot of stuff. I'm not going into detail, but you will find your edge if you're putting time into that and you feel like somewhat have connections in the space. But still, I think that premise number one is to find a fixated amount of dollars that you risk per trade. I haven't been doing it at the start of my trading career, and honestly, it has been a roller coaster, right? At some point, I've been winning a lot, so I kind of got ignorant. The ego, we talk about ego and psychological stuff also in a few seconds, but in the end, my P&L curve was more like a roller coaster, up a lot, then gave away a lot, but I always came to new all-time highs, right? This is how I run up my portfolio, and I was a bit prudent in my head and saying, yeah, I don't know. It doesn't matter if I lose a few grand here. I will hit another 10, 15K trade soon. It played out for a while, but the reality is the market is changing, and you're not allowed to trade this market with this mindset anymore. That's the status quo, right? Crypto has not enough external capital that you can really express your opinions like that. So how do I approach ARPA trade? Well, first of all, I'll fixate the amount that I'm pretty comfortable losing on a single idea, because losing is part of the game. We're always losing, right? You will always lose trading. And in the end, it's just about that you're winning more often than losing, or that you are able to cut your losses small. How to be able to cut losses small? Well, use wider stops. Use wider stops with invalidations upfront, right? For example, we talked about, I don't know, it's hard to find like an example, but the BTC ton trade, right? For example, you want to eventually long BTC ton, but you don't know about this Durov stuff, if there is news coming out. Well, maybe you can anticipate there is no news coming out, but for that being like a trade in the blind, you would need to have like a wide stop with some invalidation, because let's say you say, oh, Telegram is never going to push the coin, whatever. Well, then ideally this thing trends up, right? And in an ideal world, you don't want to see it except below the recent low that we made, right? So you have like a soft stop, manual stop if it accepts below your invalidation, but your full 1 hour stop is wider down. This is essentially just lowering your size, lowering your risk, and giving you more chill in the position to be open, to not overtrade, to not overthink. Just stick to your plan, have wider invalidation, and lower size helps you to be way more rational. This is what I can tell from my experience, and I think lowering size is a pretty underestimated skill. But yeah, how I take, for example, like an ARPA trade on dollar-wise, it's way higher on a BTC or HYPE trade than if I'm taking a trade on TON, for example. I risk less on altcoins. I risk more on liquid assets that I know, that I observed, that I looked at for thousands of hours on the screen. Which is essentially BTC and HYPE. So yeah, my risk tolerance on them are higher than smaller altcoins. Also pair trades, I have this as an own category. I tend to risk more per trade on pair trades than on directional bets, because yeah, usually, especially on pair trades, we have more time. This is the beauty of pair trading. You have more time to react on the market not going in the direction or whatever, right? A lot of guys are asking, yeah, how do I determine risk on pair trades? because it's not that simple, right? You're not putting it in like your terminal, whatever, and see like, oh, if I have a stop there, it's only what, minus $500. Pair trading somewhat is flexible because you have two legs, but this is the formula that I am taking. Essentially, position per leg is equals risk per leg, and then you do the education by the stop loss percentage, right? So 7% is your risk divided by the stop equals the dollar amount per leg, like short and long leg in this case. This is the formula I'm using, and I can tell you from my experience that it equals out, right, over time. I've been running pretty good with this. Obviously, sometimes you will have like, instead of 1 hour losses, 1.2, 1.3, sometimes minus 0.6 hour losses. It depends on the legs, right? You get the point. So it equals out over a long enough time frame for me to stick with that. And you can just use TradingView or the pair chart to count the percentage of your invalidation, right? And then use your formula, but it will get in your head pretty easily, because you will find yourself with trades with pretty similar percentage right stop loss, especially on pair trading. I tend to go with like 10%. You see most of my trades have like a 10% validation. Some higher time frame swings, hardly even 20%. I think the hype one right now, then let's keep an eye on it, right? What's the hype one in validation? I think 12. Yeah, 11.8% for 1 hour. So up 22%, that's like 2 hour profit. Yeah, let's talk about knife catching, because knife catching was a pretty common way to approach crypto in the past. Whenever we had like big invalidation, liquidation events, you tend to buy them. This is more or less gone, in my opinion. I think it's minus EV nowadays. I don't know. If you want to buy a dip, you have to ask yourself, who buys after me? And if you can't answer the question, who's the marginal buyer in the future, then you shouldn't do it with high confidence, in my opinion, to take that trade. Yeah, this is, I think Claude mixes in from like past papers I wrote down, so we can touch on this as well. It's not really about risk management, but obviously there are different types of risk, and sometimes you want to put on more risk. And to put on more risk is essentially, if you want to buy like a coin in a downtrend, may it be lower time frame, may it be higher time frame, ask yourself, why is this thing going down first? Essentially, there are two reasons for that. First of all, it could be rotation, like narrative rotation, people cutting losers, entering into next narrative, entering into winners. I don't know. Those are the coins, in my opinion, that you don't want to avoid during sell-offs, right? Those are coins that probably won't have enough marginal buyers to go for new highs against others, right? I mean, the measurement for crypto is XYZ/other. You want to see your long leg outperforming the market, right? Maybe against BTC you can do it as well. I tend to go with others. Sometimes, really rarely, right? There is a bit overreaction, let's call it FUD, for sellers who are getting carried out of the market. And prime example, we talked about it already, was Hyperliquid. After this insane run out on this candle, regulatory risk. Or is this a regulatory champ, right? It's not easy to buy during that, right? But the expected value of, if you're being right on stuff being wrongly priced in by the market, is extremely high. And guess what? We are now 5 days later in time. No one is talking about this news as regulatory risk. More, anyone is talking about essentially the narrative that we've been talking about for weeks, which is, well, this opens the gate regulatory to fucking big market, right? How big are family offices in the US? How big are hedge funds in the US? How big of a balance sheet those guys have? And let me tell you, none of them has Hyperliquid on their balance sheet. Do you have the chance to buy Hyperliquid at the moment? No. Will they have the chance in the future, starting from now on with the ETFs? And that's pretty wild, right? And this is why ETFs are up 50%. So this was a prime example for when to spot FUD. And then you can answer, who are the buyers after me? And those buyers are, in this case, what Hype Trade as example, institutionals in the US. And I'm quite certain that those buys are not crypto driven. Looking at the funding, how Hype funding was negative the whole way up, it's more or less you have it so blatantly in front of you. Tip 5, experience 5, take relative weakness seriously. It's a signal, right? If a coin doesn't go up don't give a fuck about it. I can show you my worst trade ever. Yeah, worst trade ever, I would say. This was XPL. First of all, I had an entry around here, right? This was the average of like pre-IPO. I didn't have much, but you get like 10k extra, blah, blah, blah. So this was my cost basis for first. This shit went up. This shit went up, right? I was up a shit ton. Not gonna lie, a shit ton. And I thought, oh damn, this stablecoin narrative is pretty good. This is pretty good, right? I want to get long stablecoins. Circle is trading at extreme PE. There's a decent chance that this goes into top 20, right? And I thought, okay, I'm not buying here because this was techno-relevant, top-lasting ETC. I will buy the dip. And what did I do? I set scaling orders for minus 40%. Essentially starting like 140 down to 90 cents. I had it down here with bigger size down here. In the end, I had like an average here. And I was like so certain that this will bounce at some point, right? Let's look at this in one lower time frame. Was there ever a bounce? This shit was weak as fuck. Look at those H4s. This is a signal. This is not you, oh, I want to get more. This is, the market is wrong. I want to get more. I want to get more long exposure. Fuck me, I lost a ton of money in this trade. Most important also in trading is just to learn from it. Be grateful for your mistakes. Obviously, it hurts to lose a lot of money, but be grateful for them. Because always ask yourself, well, on another scale in the portfolio, this could have been way more. So if I'm running portfolio up and taking this seriously, I don't want to make this mistake again later, right? So take the relative weakness seriously. Not saying you have to short them. If you short them, do it probably via baskets and pair, right? I'm not a big fan of having big size shorts open. I think those guys that are running well on some of them tend to blow up sooner or later anyways, because shorting is a great way to blow up. Pair trading is the way to short, in my opinion. Let's get a bit into the last 2 points are more like psychological. Ego and risk are directly linked. You have to have some ego in trading, right? You have to be retardedly confident in your positions. Strong opinion loosely held. Be egoistic. Think about anyone that is on the other side of the trade. Be grateful that other people are taking the other side of the trade. If you're short, you want to have people being long. If you're long, you want to be people sweating in their shorts about liquidations. Be grateful for them and have like an ego to say, well, my thesis is good enough to catch them offside, right? But whenever things are turning against you, you have to ground yourself, right? In any position that you're taking, you have to remember yourself, well, honestly, in the end, I'm just a and I'm gambling on something and I could be wrong. If you're wrong, there's nothing wrong with it. Congrats to the guys that have been on the other side. Try to understand, okay, what was their reasoning for this? Did they only get lucky or was I wrong? And if you were wrong, then this is where your ego gets very low. You inhale those information. You try to remember them in the future, try to not make the mistakes. And this will help you to grow your ego over time, right? So you have steps up in your ego, then you have like those drawdowns if you take it like P&L curve wise. But in the end, you want to have your confidence growth being up only, essentially. This is when you reach like your peak performances. You always reach them on winning streaks, on being heavily confident, but never be that guy that shits on anyone losing money that is taking the other trade, right? You can call them just for fun in the group chat once in a while, yeah. I mean, but you have to be grateful, right? If those guys weren't on the other side, you wouldn't have made any money. That's how markets works, right? Being wrong is not a failure. Staying wrong is. You're not a predictor, you're a risk manager with pieces, right? Strong opinions loosely held, update the moment evidence shifts. The market does not reward conviction, it rewards adoption. Talking about conviction, I tend to TP quick. I tend to TP whenever I'm a profit. Well, like I talked about those big P&L swings, that came from holding positions to riding up 30% or down 20%. I'm not that guy anymore. I tend to TP quick moves. This hype one is really an outlier right now. Obviously, it's running, it's at all-time highs. That's a different kind of shoe. But honestly, I haven't had this trade this year once. This is the first time I have been taking a swing, essentially. We talked about this a bit already at the beginning of the stream, but lowering size is key. lowering size in trading is so underrated. It's always, you see those guys in the chat, the market is untradeable. Who is trading that? Are we even here? The market is here, and the market is just a status quo. There's nothing wrong about the market. Obviously, there are in crypto a lot of scams. It's your own fault if you're trading them and you can't handle the volatility, or if you're pissed about it, right? Take the market as granted, be grateful, or just avoid it during times when you don't have a clear thesis, when you don't see who's the next buyer. Go out and look for pair trades. Look for pair thesis. And if you don't find any, chill, observe the charts, sit down, follow the flow, follow the tape, follow how pair trades are moving during, like, I don't know, sideways, grind down, grind up, and be well prepared for another somewhat similar move that we're in at status quo that you would have been maybe being pissed about if you would be trading this full time. It's no problem to have no position open. Obviously, your exchange is fucked that they don't get any collect any fees from you, but you're not here to give money, right? You're here to manage your book, and this is key. So size down. You can have trades open if you're really like trying to learn. I think it's important to have positions opened, and paper trading is not really helping. But just don't do it with insane size if you don't have like a high conviction. And think about your portfolio or your accounts more of like, it's a marathon, not a sprint, right? You're not getting rich from today, tomorrow. Obviously, there were some guys that were getting mad rich on meme coins, but the people that are really getting mad rich right now are your average guy that is had high conviction. Those riches, they get mad rich. You are just here to outperform the market, and for that you have to be patient, you have to be controlled, and you have to manage your risk, right? And I think those experiences or tips I just shared can help you, and those help me. Like the best things to learn of are mistakes, right? And so be grateful to make mistakes. Be grateful for a lot of stuff. I think this helps a lot mentally. Don't be that guy that is just pissed off and just coming here to complain. You're not getting value from anyone if you're not giving value to them, right? Find value with people around you that are into the same stuff, and you will see how things come together from time to time. And if it's not clicking for you, it's not a big deal, bro. Say, okay, trading is nothing for me. I'll be here investing or buying dips on 30% spot. Maybe I will put in like multi-month low-size pair trades and keep them on pair and not over-managing them. Because I'm over-managing, I'm not good. That's fine. You will get that feeling of enough of a track record. But I think if you're really following those steps, you will really get the feeling of, yeah, I'm losing actually not that much anymore. Right? And if I hit one big trade, I'm in the green. And once this clicks, yeah, this is your breakthrough moment, I would say. And then you can think of taking trading more as a sport, more seriously, and try to get better and better. And this is when your ego is rising, and this is what Lina means right now. You've matured, bro. Because trust me, I'm not that guy that was just talking last 25 minutes. I'm not that guy all the time, right? I'm not that laser focused, but I know that if you follow those steps, your P&L curve will be green. And I've been pretty much doing that in the lab, right? So I have a track record of this, and this P&L curve is essentially not sizing up, but when you're wrong, TP early, right? You see my wins are averaging 0.85, my losses are averaging 0.46, but the P&L is like that. Probably this is a better P&L than 99.5% in crypto. Obviously, it didn't have any like big spikes, sadly. I wish, but this is not what you're getting from the stuff I told you last 25 minutes. You won't see your portfolio like 10xing in a minute, but you will slow grind. And at some point, maybe there's another hyperliquid airdrop. Maybe there's another generational wealth effect in crypto. You're positioned that well in this point that all things come together, and you probably make like yearly salary. That's not like moon talk or whatever. No, that's just how all those guys that came to money from trading. That's how wealth was created last few months by traders. And trust me, lots of guys on Twitter are no traders. Cut the noise. Cut the noise is another thing, right? Focus on your own trading and cut noise. Just avoid looking at a lot of bullshit on Twitter.